Let's be honest, last week hurt. That brutal, gut wrenching altcoin crash that vaporized portfolios and spread fear across the entire market. That wasn't just a glitch. That wasn't some random act of a volatile market. What if I told you that was a planned demolition? It feels like the market makers, the colossal whales who truly move prices, just played the market like a fiddle. They saw a landscape dangerously over leveraged, frothing with retail euphoria, and decided it was time to clean house. It looks as though they may have helped engineer a system wide reset to wipe out leveraged traders, shake you out of your positions, and buy your fear at a massive discount. While millions were getting liquidated and panic was setting in, they were quietly setting the stage for the next explosive, parabolic phase of this bull market. This wasn't the end. This was a calculated, manufactured beginning. In this video, I'm going to pull back the curtain and show you the on-chain evidence that points to how they did it, why the mainstream headlines are only telling you half the story, and most importantly, I'll lay out the game plan for what comes next. Because this reset, as painful as it was, has created one of the greatest opportunities of this cycle. Stick with me. But before we get into it, a quick and essential reminder. This is not financial advice. This video is for educational and entertainment purposes only. The crypto market is inherently risky and volatile. Always do your own research and never invest more than you're willing to lose. Also, throughout this video and in the description below, I may mention platforms or services I personally use. Some of those might be affiliate links, meaning if you use them, I may earn a small commission at no extra cost to you. It's a great way to support the channel so I can keep bringing you this kind of deep dive content. Now let's get to it. Let's not mince words. The events of last week, starting around October 10th, were a massacre. Across the board, we saw a sea of red that felt relentless. We're talking about the largest single day liquidation event in the history of cryptocurrency. The numbers are staggering. In just 24 hours, over $19 billion in leverage positions were wiped off the map. That's billions with a B. Nearly 1.6 million individual traders had their accounts liquidated, forced sold by exchanges because they ran out of collateral. Think about that. That's like the entire population of a major city having their trading accounts vaporized in less than a day. For anyone holding altcoins, it was especially brutal. While Bitcoin took a hit, falling from its recent high of around $123,000 down to the $107,000 range, the altcoin market was pure carnage. We saw major established projects get their prices slashed by 30–40%, and some smaller altcoins experience drops of 70% or more. An altcoin index tracking the broader market plummeted by nearly 40% in minutes. It was a violent, shocking flush out that left a trail of destruction and induced a level of fear we haven't seen in years. The emotional toll was immense. On social media, the sentiment flipped overnight from unbridled greed and moonshot predictions to absolute terror and despair. People who felt like geniuses a week earlier were suddenly questioning everything. The narrative became, is the bull market over? Was that the top? Should I sell everything before it goes to zero? This is the exact emotional state that precedes massive bottoms. This is the feeling of capitulation. And this feeling wasn't just limited to retail. The chaos was so intense it stressed the market's very infrastructure. Decentralized finance, DeFi platforms processed record-breaking liquidations, and even major centralized exchanges experienced glitches and slowdowns under the immense load. It was a system-wide stress test, and the main casualties were the overeager, the overleveraged, and the underprepared. The pain was real and widespread, but the key question isn't what happened, but why it happened with such surgical precision. So, what triggered this historic collapse? If you only read the mainstream headlines, you'll get a simple answer: Donald Trump and the escalating trade tensions with China. And to be fair, they aren't entirely wrong. The announcement of potential 100% tariffs on Chinese imports was the spark that lit the fuse. It sent a shockwave through all risk assets, not just crypto, and provided the perfect cover for a major market move. But here's the critical distinction: that news was the catalyst, not the cause of the meltdown structure. A catalyst creates a reason to sell, but the way the market imploded, the sheer speed, the depth of the liquidation cascade, the surgical strike on leverage traders, that wasn't just a natural reaction. That felt like a design, an execution. It looks less like a random forest fire and more like a controlled burn, with the geopolitical news used as the perfect smokescreen. Let's look at the evidence. For weeks, the market was getting dangerously greedy. A key metric is funding rates, the fees traders pay to keep their leveraged long positions open. When everyone is bullish, these rates skyrocket. Just before the crash, funding rates were at unsustainable highs. The market was a tinderbox of leveraged longs just waiting for a match. The big money players, massive trading firms, and whales saw this. They knew the market was overwhelmingly tilted to one side. They knew millions of traders had placed huge bets with borrowed money, with their liquidation prices clustered just below the current price. It was a multi-billion-dollar pool of liquidity just waiting to be taken. So, how might they have done it? On-chain analysis points to a coordinated and deliberate event. It appears to have started with a relatively small but impactful market dump of around $60 million on specific assets. This was just enough to trigger the first wave of liquidations. When a leveraged long gets liquidated, the exchange force sells their collateral. This pushes the price down further, which in turn triggers the next cluster of liquidations waiting just below. This is a liquidation cascade, a domino effect, and it seems the market makers were there to pour gasoline on the fire. Analysis shows that as the cascade began, liquidity, the buy orders that normally stabilize the market, vanished from order books. It was pulled almost instantly. This is like removing the floor from under a falling object. With no buy orders to absorb the selling pressure, the price plummeted in a vacuum, allowing altcoins to crash 30–40% on relatively low volume. And who was there at the bottom, buying up those forcibly sold assets from terrified liquidated traders at a massive discount? The smart money, the very same entities who, some argue, helped orchestrate the event. Some analyses even suggest certain large entities held massive short positions, profiting immensely from the crash they may have helped engineer. So while headlines screamed, Trump's tariffs crash crypto, the real story, the one written on the blockchain, is far more nuanced. It was a story of extreme leverage meeting a geopolitical catalyst, which was then weaponized by sophisticated players to cleanse the system for their own benefit. And now that the deadwood is cleared, the forest has room for new, healthier growth. This is the Great Reset, and it has perfectly set the stage for what's coming next. All right, the reset was brutal, but it was also necessary. The market has been cleansed of its worst excesses. Leverage has been flushed out. Assets have moved from weak, emotional hands to strong, patient ones. This is the textbook setup for the next major leg up. But a clean slate isn't enough. You need fuel for the fire. And right now, 4 immense macro-level catalysts are aligning on the horizon. I call them the 4 horsemen of the next bull wave, and their convergence could power the most explosive phase of this market cycle yet. Catalyst 1, the de-escalation of geopolitical conflict. The first and most immediate catalyst is the potential calming of geopolitical tensions, particularly with the US and China. For weeks, the specter of a full-blown trade war has loomed over global markets, acting as a massive wet blanket on risk appetite. When there's fear of economic conflict, capital flees from assets seen as risky, like crypto, and flows into perceived safe havens. Every headline about new tariffs or export controls sends a jolt of fear through the system. However, behind the scenes, there are hints of a push towards de-escalation. Reports suggest that high-level talks are planned for the end of the month, and President Trump has even made reassuring comments on social media, suggesting a desire to avoid a larger conflict. This matters immensely for crypto. Why? Because a reduction in geopolitical risk removes a major source of global uncertainty. It gives institutional capital, the big money that's been waiting cautiously, the green light to step back into the market. As the war drums fade, risk-on investing can resume. Catalyst 2, the imminent pivot to interest rate cuts. The second horseman is the Federal Reserve's pivot to cutting interest rates. For the past year, high interest rates have been the single biggest headwind for crypto. When you can get a nearly risk-free return of over 4% from government bonds, it makes speculative assets like crypto far less attractive. But that paradigm is now shifting. The Federal Reserve has officially signaled its pivot. At its September meeting, the Fed initiated its first cut, lowering the benchmark rate by 25 basis points to a range of 4.0% to 4.25%. While small, this was a monumental signal. The hiking cycle is over, and an easing cycle has begun. Projections from the Fed's own dot plot indicate they expect at least 2 more cuts before the end of 2025. If you want to see where the smart money thinks we are headed, just watch the price of gold. Gold is often called the canary in the coal mine for monetary policy. Its recent surge to all-time highs is no coincidence. It's a glaring signal that a wave of liquidity is expected to be unleashed. Gold rallies when investors anticipate that fiat currency, like the US dollar, is about to be diluted through rate cuts and money printing. Investors are front running the Fed's pivot. As the yield on safe assets falls, trillions of dollars will come searching for higher returns. That capital will flow into stocks, and it will pour into the highest beta asset class on the planet, cryptocurrency. Catalyst 3, China's economic Big Bang stimulus. The third horseman is galloping in from the east. All eyes are on China for its upcoming fourth plenum meeting, scheduled from October 20th to 23rd. This isn't just another political meeting, it's a landmark event where the Communist Party will lay out its economic strategy for the next 5 years, and all signs point to them unleashing a wave of economic stimulus. China's economy has been facing headwinds, from a struggling property market to weak consumer demand. Historically, when faced with such challenges, Beijing's response has been to open the taps and flood the economy with liquidity. We are expecting to see a major push for monetary easing and a strategic focus on boosting key sectors like technology and domestic consumption. Why does this matter for crypto? Because liquidity is fungible. When you inject trillions of yuan into the Chinese economy, a portion of that capital will seek higher returns and a hedge against currency devaluation. It will find its way into global markets, and crypto is a prime destination. An easing of the trade war would be a massive added boost to global market sentiment. The timing of this, right after the market reset, is incredibly bullish. Catalyst 4, the orchestrated calm in US politics. The final horseman is more subtle. The current state of US political dynamics. It might seem counterintuitive, but the current strategic maneuvers are creating a period of forced market calm, an artificial quiet before the storm. We've seen how a single tweet about tariffs can trigger a necessary market function like deleveraging, all while keeping the broader narrative focused on politics. This creates a unique window where the market is held in a state of suspended animation, seemingly waiting for the major uncertainties, the geopolitical situation, and China's economic plans to resolve. Think of it as a coiled spring. Right now, macro forces are pressing down on that spring, building immense potential energy. The crash last week was the final adjustment, ensuring the spring is perfectly coiled. The deadline appears to be the conclusion of the Chinese plenum around October 23rd. Once that meeting wraps up and China's intentions are clearer, the artificial constraints on the market could be released. The resulting explosion upwards could be violent and swift. These four catalysts aren't independent, they're interconnected and self-reinforcing, creating the confluence of events that smart money has been waiting for. So the stage is set, the reset is complete, and the four catalysts are aligning. The question for everyone watching is, what do you do now? How do you position yourself to capture what could be life-changing gains without getting wiped out? The wrong approach is to go all in on random altcoins with 100x leverage. That's the exact behavior that got 1.6 million traders liquidated last week. The smart approach is disciplined, strategic, and automated. First, this is the time for dollar cost averaging, DCA. The fear from the crash is a gift. It has given you a chance to accumulate top-tier assets at a discount. Don't try to time the exact bottom. Systematically deploy capital into projects you have the highest conviction in. I'm personally focusing on sectors with strong narratives: real-world asset tokenization, RWA, decentralized physical infrastructure, DePIN, and of course foundational layers like Bitcoin and Ethereum. This is not the time to be scared. This is the time to be a disciplined buyer. Second, you must have a plan for taking profits. The next leg up will be euphoric. It will feel like it will never end. That is precisely when you need to be selling. Giving back all your gains is one of the most painful experiences in crypto. This is where automation becomes your best friend, because trying to manually sell the top is nearly impossible when your emotions are running high. This is exactly why I use trading bots on platforms like Pionex. A grid bot, for example, is perfect for this market. You set a price range and it automatically buys low and sells high 24/7, accumulating profit as the market moves up. It takes the emotion completely out of the equation. Another powerful tool is the rebalancing bot. You can create a portfolio of your favorite coins, say 50% Bitcoin, 30% Ethereum, and 20% Solana, and the bot will automatically maintain those allocations, forcing you to sell high and buy low without thinking. These aren't get-rich-quick schemes. They are tools for risk management and disciplined profit-taking. In a market that's about to get very emotional, taking your own emotions out of the driver's seat is the ultimate edge. If you want to see exactly how I set these up, step by step, join my free Telegram community. The link is in the description. I share my exact bot parameters, tutorials, and there's a whole community of traders sharing what's working. We also run exclusive airdrop contests you won't want to miss. The bottom line is this: the opportunity is here, but it demands a smarter strategy. Accumulate patiently and have an automated plan to realize your gains. Don't be the person who rides it all the way up and all the way back down again. So, let's bring it all together. Last week's devastating crash wasn't the end. It was a brutal but necessary reset triggered by geopolitical news, but as some evidence suggests, expertly manipulated by market makers to clear out the excessive leverage choking the system. They bought your fear at the bottom. Now, with the market cleansed, we have four powerful macro catalysts converging: the potential easing of global conflicts, the beginning of a Fed rate cutting cycle, a massive stimulus injection expected from China, and a period of orchestrated calm in US politics holding the market in a coiled spring. The stage is set for a powerful move to the upside. The patient investors who accumulated during the fear and have a clear strategy for taking profits will be the ones who are rewarded. If you survived the great reset, congratulations. You've made it through the hardest part. The most exciting phase is just about to begin. I'm incredibly bullish, but what do you think? Are you optimistic after this reset, or are you still cautious? And what is the one coin you are most confident in buying right now? Drop your thoughts in the comments below. If you found this analysis helpful, do me a favor and smash that like button and subscribe. Stay smart, stay safe, and I'll see you in the next one.